I'm joined by Aadil Zaman, a partner of Wall Street Alliance Group. Aadil, thank you so much for joining us. All right, so let's talk about your outlook for the second half of this year. The first half was bumpy, and you had predicted a pullback. For the second half, you say you are predicting some gains, but that there will be bumps in the road. Tell us what you expect, especially in terms of those bumps.
Yes, absolutely. So we do expect, as we forecasted, we do expect that the second half of the year is going to be strong. But along the way, there will be bumps, there will be volatility. The primary drivers of those is going to be the tariff and the budget deficit. These are the two things that will create this volatility. But ultimately, we do feel that both of these issues will get resolved and the market continues to go higher.
Okay, you think that both of those issues will be resolved, but when we think about tariffs and tariff uncertainty, we have gained more clarity, we have gained more certainty, we have Japan. The expectation is we will make progress soon with the EU. Which is the bigger risk for markets, the tariff uncertainty or the budget deficit?
I think the tariff uncertainty is definitely the bigger risk over here, because ultimately we feel that the budget deficit issue does resolve itself through GDP growth, because if you look back when we had internet come about, huge productivity increases, right? So we think that because of AI, we are going to see huge productivity increase, which is going to cause GDP to grow and which will mean that our revenues will increase.
Okay, okay, so I hear what your point about productivity and AI, right? But what about that is going to deal with the budget deficit? I mean, it's not like a bot can pay those bills.
Well, if the base increases, the revenues go up, right? I'll give you an example. When Trump cut corporate tax rates from 35% to 21%, guess what happened to corporate revenues, tax revenues? It went up from 200 billion to 500 billion. Now, in this big, beautiful bill, one of the provisions is bonus depreciation of equipment. That brings the effective tax rate down to about 15%, in our opinion. That in itself could potentially increase the GDP by 0.9%. So because the base increases, the revenue increases, that definitely helps in resolving some of the deficit issues.
So let's talk a little bit about tariffs, because you said that's a bigger risk. We're about a week away. August 1st is coming quickly to the new tariff deadline, essentially. Do you think the markets are underestimating the risk of not having as many deals as expected?
I think that is likely, and that's why, every time there is some type of a deal, the market breathes a sigh of relief. I think this is one of the biggest risks, because it's very hard to predict with the way the policies are coming out of, with Trump negotiating. There's a lot of uncertainty, and I think that could be a potential near-term risk.
Okay, let's talk a little bit about one of the names that you like in this environment. You like Costco. It has been an underperformer compared to the S&P 500 year to date, but look, investors are looking for other opportunities, for instance, beyond tech. Why do you like it now?
Well, because if you want to have retail exposure, we think Costco is a great way to have that exposure, because other retailers are going to struggle because of tariffs. There's no way around it. But if you look at Costco, they've got that fee, recurring membership fee that's coming. That has nothing to do with tariffs. That is sticky, it keeps coming. And also, if you want to go and shop at a retailer, Costco's relative value proposition when it comes to prices is very attractive compared to other retailers. Okay,
I do think you have a good point, but families are smaller now than they used to be, right? Here in the U.S. So what's the value proposition? Where that comes from, for instance, I have a small family. I was a long-time holdout for Costco and just joined this year for the gas, honestly. But when you think about that and family dynamics, do you think that Costco still has that edge in terms of the value proposition?
Definitely, I think it does, especially if you go to some of the suburban neighborhoods. We recently went to visit family in California, and everyone loves Costco over there. And the great thing about Costco is that they do make a significant amount of their revenues through the membership fee. So I think that dynamic continues, and Costco continues to do well. That's why it's a core position in our portfolio.
Okay, core position in your portfolio, shares up slightly year to date, up about 2% year to date. So underperforming the S&P 500, but you see some potential upside from here. Aadil, we'll have to leave our conversation there for now. Thank you.
Thank you.
That's Aadil Zaman, partner of Wall Street Alliance Group.